Derivatives are supposed to be your hedgers and income enhancers. They are not for speculations. They are not for mindless driving, because just one bad month can wipe out your entire capital. So this is not a strategy problem, it is a governance problem. You don't govern what you are doing. Hi, in this short video, I want to walk you through something very important. It is not about the setup, it is not about the strategy, but it is about the patterns that destroy F&O traders day in and day out. And if you have been a F&O trader, you will recognize these patterns. Pattern number 1, starting with the leverage, not the structure. Most of the retail traders start with low capital, but they have high leverage because future and options by design provide you to have higher leverage. With the small capital, you can take big positions, and that looks exciting. But the truth is, leverage without structure is just like driving a speed car without having brakes. Very few traders have a governed plan. Very few traders have a risk and reward mapping, and that's where exactly the damage starts. Now the second pattern, no capital allocation plan. They have no clarity on how much money is to be put in F&O. Sometimes they put 50, sometimes they put 70, and if they have one or two good trades, then they can even put 100% of their capital in F&O, and that is madness. Derivatives are supposed to be your hedgers and income enhancers. They are not for speculations. They are not for mindless driving, because just one bad month can wipe out your entire capital. So this is not a strategy problem, it is a governance problem. You don't govern what you are doing. Pattern number 3, emotional position sizing. The position size changes based on the emotions. It changes on one or two good trades or one or two bad trades. You adopt one strategy, there is a certain position sizing for that strategy. But if your trade goes well or if your trade goes bad, accordingly your strategy changes, your emotions changes. So the position sizing should be based on the market. It should not be based on the emotion. So it is not position sizing, it is emotion sizing, and that is a destructive force for F&O traders. And the fourth pattern is obsession with the tips, because you don't understand the market. You just think that taking some tips randomly from here and there and you can get into the trade. True, you can get into the trade, but you don't know where to exit from the trade, because every tip giver is going to have some philosophy of his own. So if you are just taking the tips from that person, you can enter, but you don't know where to exit. Sometimes you exit from the profit driving trade prematurely, or sometimes you don't know whether you have to stick. Pattern number 5 is the wrong expectation. So many people, specifically in F&O, come by thinking that F&O is going to provide them 100% return every month, and that is really a wrong expectation. They think that every month they will keep on having high returns, and they don't consider the possible losses. They don't consider the structure. They don't consider risk and reward, and because of high return expectations, they get into the wrong trades, and then they have to suffer. This high expectations of the return and mismatch with the reality is the single biggest factor which destroys capital in the market. Now, if you have carefully looked at all these problems, none of the problem is related to strategy. So strategy is not the core problem. The problem is about mismatch in expectations, problem is about misgovernance, and problem is about not having a proper plan to execute trades. Now the core problem is about capital allocation. Core problem is around risk and reward design. Core problem is about position sizing, and most of the traders keep on searching the better strategy. One strategy they execute, if it goes bad for a day, then they jump onto the next strategy, and that's again disastrous, because any strategy is not going to provide you 100% result. Even the good strategy is going to provide you 70-75% of the results. But if you change those strategies when they fail, then you are not going to stabilize on any of the strategy, and finally it is going to destroy your capital in F&O. So you need to have a shift. How my capital is going to be allocated between different strategies, between different trades, and what is the risk reward going to be? What is my stop loss for each of the strategy? What is my return expectation, and what is my exit point when I have gained a certain amount of return? What is my return expectation for the month? What is my return expectation for the whole year? Is it too much? Because if you are having high return expectation, then risk for that expectation rises exponentially. So you need to have a balance between proper return and risk framework, and that's why my focus is not on the signals, not on the tips, but my focus is to make you understand the strategies which you can use passively to earn additional income from the stock market. So my focus is for you to earn additional income from the stock market, not chasing the tips, not chasing the signals being provided by others. And if you are ready to move from the reaction to the proper structure of the trades where you can enhance your returns, then watch our next video in this page.